and welcome to the OCO Roundtable podcast. From Oraro and Company Advocates, my name is Melanie Mwenda, and I'm an associate in the firm. In today's episode, we're focusing on a key part of Kenya's tax landscape: tax returns and tax refunds. Kenya operates a self-assessment tax system whereby both individuals and juristic persons are legally obligated to compute, declare, and remit their taxes to the Kenya Revenue Authority. This system places a responsibility on taxpayers to accurately disclose all their sources of income and determine their tax liability within the prescribed timelines and as guided by tax laws. On the other side of the equation, KRA oversees compliance. It retains the power to audit, verify, and assess taxpayers to ensure that the correct amount of taxes are being paid, with nothing more or nothing less being paid. This declaratory system is designed to promote transparency, encourage voluntary compliance, and empower taxpayers to take charge of their own tax affairs, which is why understanding how this system works is essential. To help us unpack this, I'm joined by Renee Omondi, a partner in the Dispute Resolution Practice Group at Oraro and Company Advocates. With over 26 years of experience in litigation and tax dispute resolution, Renee has built a distinguished reputation for her depth in expertise and strategic insight. She has been consistently recognized as a key lawyer in leading legal directories for her work in tax and dispute resolution, including her most recent acknowledgement in the ITR World Tax Rankings. Karibu sana, Renee.
Thank you very much, Melanie, for the kind introduction, and it's an honor to sit in this session with you.
So, Renee, to start us off, what is a tax return?
So a tax return is a self-declaration where you notify KRA of the income that you have earned, the expenses you have incurred while earning that income, and all the payments that have been made. So when you're filing this tax return, it's a formal declaration. It is done on iTax, and the information inputted there must be accurate. In the event KRA notes that there's any inaccuracy, then they flag your return and can seek further clarification from you. So as I've indicated, you're supposed to declare the expenses you have incurred. You don't just include any information or any expenses. It must be related to your business. For example, there are people who have in the past or continue to do so put their grocery expenses for their homes as office expenses. That will be disallowed. So all expenses that you declare must be related to your business. And secondly, you must declare all income. So if you're in employment and you have any other income, then you must declare both your employment income and income earned from these other sources.
So picking it up from there, Renee, in tax matters, time is always of the essence. So could you highlight for us some of the key filing timelines and the consequences of late filing or non-compliance?
Thank you very much, Melanie. As individuals, you're required to file your tax returns on or before 30th June of the following year. So the end year is 31st December of the previous year. So like now, we'll be filing our returns for 2025 in 2026. So the end year is 31st December 2025. For businesses, it depends on your financial end year. So if your audited accounts read 31st of December 2025, you'd have to file by 30th of June. However, for companies, you find they do have different end years, and therefore you must be guided by your financial statements. So for the businesses, what I have referred to for the businesses, that is on income tax, and also for the individuals. For VAT, you're supposed to file your return by the 20th of the following month. The same applies to PAYE. I tend to treat withholding tax also as a return, but that is required to be done within 5 working days of you making the payment. So those are the various timelines that are there. So you must be well versed and ensure that you file within time. If you don't file within time, then there's penalty. There are different rates that are attributed to each tax return.
So given your years of experience, what are some of the common mistakes that you've seen when taxpayers file their returns?
Well, there are quite a number of errors that taxpayers make when they are filing their return. The first one is you file a nil return, yet you have income. That has a consequence, because if later on you want to acquire an asset, a question will arise and your account will be tagged. So when you pay stamp duty, the question will arise, where has Renee obtained these funds to make a purchase of a property, let's say in Runda, for example? KRA then will flag your account and send you notices to explain why you're a nil filer and yet you're able to acquire this property. Another mistake that happens is, and it's a live one that we have actually dealt with, uploading the wrong zip file for your business expenses. So if you put in the same return as the previous year, of course your account will automatically be flagged. So those are some of the common mistakes: failing to declare all the income, failing to include all your expenses, or overstating your expenses. That's another common mistake that people make while filing their returns. For PAYE, the error that can occur is you make a block payment. If that block payment is done, then the amounts don't hit the employee's account. So you will find that your P9 declares the income you earned for the whole year, but when you check your individual ledger as an employee, the information is missing. Therefore, you have a debt. So what the employer has to do is to amend and put specific details of the employees in the return. This has been a common problem with the government entities because of the number of staff. And right now, I think KRA is trying to resolve those issues with the various government entities, because if you worked for a government entity, you find you have a liability, but the taxes were paid. So those reconciliations have to be done. And for you to have that reconciled, you provide the P9s and, of course, evidence of employment by whichever entity is affected.
I think also picking it up from the errors and mistakes that you highlighted, the other thing that taxpayers often overlook are the guidances and the notes that KRA always issues with regards to these returns. There's actually a recent one. Probably you can talk about that as well.
Yes, recently KRA has issued a public notice on validation of income and expenses in the income tax returns. And I do agree with you, quite a number of taxpayers do not take cognizance of such notices, and then they are caught flat-footed. So this particular notice has actually stated that all expenses will have to be validated by KRA for you to be able to claim. And they require everyone to have these expenses registered under eTIMS. So that means as a taxpayer, you need to have an eTIMS account, whether you meet the VAT threshold of 5 million or not. It will be difficult because, seeing the timing of the notice, there are quite a number of people who might not have registered for eTIMS, presuming that since they don't meet the threshold, they are not required to have an eTIMS account. So those expenses, I'm looking forward to see how they will be handled. And already there's a lot of discussion that sufficient notice should have been given, and actually it should have been effective from 1st January 2026, so that at the end of December 2026, then it is implemented. So we wait to see if any further directives will be given. And if not, then taxpayers be ready to have quite a number of your expenses disallowed, which will result in you paying higher taxes. Another common mistake is failing to file your return. I've had people argue that I have not earned any income in this current year, therefore I don't have to file my return. As long as you have a valid active PIN, you're required to file your return. If you don't have any income, you must file your nil return, irrespective of whether you have earned income or not, even if it is late. Better late than never. So if you file a late return, then you note that there'll be a penalty on it. For companies, you pay a penalty of 10,000, and for individuals, it's 2,000. So it's better for you to file your return. But for PAY, it's more punitive. It's For every month you fail to file a return, there's a penalty for failing to refile that return and also for VAT as well. So those are the things that a taxpayer must have in mind, that as long as your PIN is active, then you must comply with the requirements to file any return that you are registered for. So if you have the PAYE obligation, you have income tax or obligation or VAT obligation on your PIN, you must meet the statutory requirements to file that return.
Thank you for that, Renee. Really, really insightful. So let's shift gears to tax refunds. What is a tax refund? When would such a situation arise? Maybe take us through some examples and instances for our listeners.
Okay. A tax refund is a reimbursement of excess taxes that you have paid. How does this arise? You may overpay taxes. Your employer may pay more PAYE on your behalf. As a business, you may have paid excess installment tax and therefore an overpayment occurs. Or you may have VAT input credits that exceed your output, as in your purchases are more than your sales. So that way then you have incurred a credit on VAT. Then there are withholding tax offsets that also arise and result in overpayment of taxes. So that way then you find your account has a credit, an amount that should be paid back to you. So that's how refunds or excess taxes do arise in one's iTax account.
So practically, as a taxpayer, how do I go about getting my money back?
Okay, iTax has a portal where you apply for your tax refund. For employees, it's straightforward. You will definitely see once you filed your return that you're in credit. You log into iTax, make your application, attach your P9 form for the year, attach your employment contract, and then they will process it. You must support these applications with documents. For businesses, you will find that, yes, you will make the application, you upload whatever documents they request you, mainly financial statements. This may trigger an audit because they need to verify and ensure that indeed this amount is due and payable. However, if you have a liability from any other tax, then it's not automatic. There's a procedure that you have to go through. And once they ascertain that income is due and refundable to you, either they offset what is outstanding first, and any balance that is due to you will be paid out to you. As a taxpayer, you can also give KRA instructions and tell them that whatever remains, we can apply it towards future taxes. I know people like receiving cash, but sometimes it's prudent tax planning to have this amount in your account and have it take care of future taxes when you may not be liquid enough to make these payments yourself. And in the event that the overpayment is under income tax, that amount can be applied to offset any other tax that is still outstanding. So if I have VAT outstanding in my account, KRA can attribute and apply that to VAT, to PAYE, or any other amount that they need to settle. So I can only get the balance once my account, my ledger is fully balanced for all the requisite taxes that I'm obligated to pay.
So are there any timelines that the taxpayers should be aware of in that process?
Yes. For income tax, you have 5 years within which to apply for a refund. For all other taxes, you have to apply for your refund within 12 months. That means that if you're late even by 1 day, then you lose the opportunity to claim that amount. With regard to timelines of determining an application for refund, so once you file your application for refund, KRA has 120 days to ascertain that request for refund. And the refund, if confirmed that that amount is due and payable, then they have 6 months after the ascertainment to release this money to you. If they don't complete that process within the 120 days, then your application will be deemed to be allowed and they are supposed to pay. You can write and make the request that now the time has lapsed, please release my funds to me. where in the case of a business, where, and as I've indicated, it can trigger an audit, you will now find KRA inviting the business owner to attend and provide their financial statements, their trial balances, their accounting documents for them to verify that indeed the refund claimed is bona fide or is real, in simpler layman terms. So if KRA fails to refund you this money, then it continues to earn interest at 1% for as long as that amount is outstanding. So for a business, all businesses pay installment tax, that is 4 times in a year, and you'll find sometimes that you have overestimated the taxes you should be paying. So if that happens and there's an overpaid installment tax, you'll not be entitled to a refund. Actually, what KRA does is to apply it to the next year. And if eventually they find that you are not entitled to carry forward that installment tax, then they'll subject the amount to tax in the year that it ought to have been taxed. So you just have to be careful and look at how you estimate your income for the year and the taxes that are due and payable. In the event that your application for refund is not allowed, then in this particular case, you have the right to appeal direct to the tax appeal tribunal. Unlike other decisions where you go through the objection process, in this particular scenario, you don't need to file a notice of objection. You simply serve KRA with a notice of appeal, and then you proceed to file your appeal at the tax appeal tribunal for hearing and determination, attaching all the requisite documentation to support your application, of course, together with the application that was rejected or not considered by KRA.
Thank you so much for that, Renee. Very, very insightful. Maybe any parting shots as we conclude the episode?
Yes, for me, as much as you have the right to proceed to the tribunal, you also have a right as a taxpayer to file any issues you may have with the tax ombudsman. It's important for purposes of accountability because sometimes things just don't work and nobody's aware that there are certain lapses that are taking place. Tax compliance doesn't have to be a maze. Understanding your obligations and rights, especially around the returns and refunds, can save you a lot of time, money, and stress. And in this regard, it's important for you to work with qualified professionals. That includes your accountants, your auditors, legal professionals like ourselves. And we are definitely available to provide the necessary assistance so that you don't find yourself in a position where you're vexed, you're stressed, and you just think that the world is coming to an end. It is not that serious. It can be perceived to be serious, but with the right people working with you, such as ourselves, you'll be able to avoid that. And finally, stay informed, stay compliant, and don't hesitate to seek professional advice, as I've already stated, when you are in doubt. Just don't access iTax and start pressing or accessing portals and submitting returns, and then you find yourself in a difficult position. KRA has also notified the public that they are coming up with a simplified system. We are looking for employees to file their returns. So if you have only income from employment, the tax return should be basically automatic. We are looking forward to that. It will make it much, much easier for those who don't have any other income other than employment income, though there's a kind of simplified system under the ITR, but I don't think many people utilize it. But what we are looking forward to is a system where at the moment I just say, do you have any income other than employment income? I say no, then the return will automatically generate itself. We look forward to seeing that.
If you found these discussions enlightening, we invite you to listen to more of this and other episodes in our tax series. We value your feedback, and therefore, we encourage you to reach out to us on our social media channels using the hashtag OCO Roundtable. Until then, goodbye and take care.